Donald Trump's trade war keeps escalating and becoming more and more serious. After the tariffs the US imposed on China, China has now announced it will do the same in return. And with that, we're getting dangerously close to the worst-case scenario. Let's break this down. The trade war started by Donald Trump is heading into very rough territory. Now, while most investors agree that this brutal tariff hike by Trump is a double-edged sword, it's harmful not only to the US economy, but also to its major trade partners. Some of those investors were still holding on to a bit of hope. Hope that this whole thing was just a bluff. That Trump's aggressive tariff increases were simply a negotiation tactic, a way to pressure others into a multilateral agreement which, once reached, would lead to all these tariffs being reversed. Some even imagined we'd come out of it all with a more liberalized global trade environment than before. That would be the least bad outcome. We let the bull into the China shop, but we get him out before he destroys everything. But for that hopeful scenario to actually play out, the US's trade partners, like the European Union, Canada, China, and so on, would need to avoid retaliating. Because if they respond with their own tariff hikes, we know exactly how Trump will respond, by doubling down. If every country jumps into this tit-for-tat logic of raising tariffs in response, then what happens is simple. Global trade flows start to break down. International supply chains collapse, and the world economy moves straight into recession. And unfortunately, that optimistic scenario, it's looking less and less likely. On one hand, Canada has already announced it's going to hit American cars with a 25% tariff, the same rate the US is applying to imported vehicles. And over in Europe, prominent political figures like Emmanuel Macron seem more than willing to escalate the conflict too. France's president has halted all new investments in the United States and is pushing internally within the EU for retaliatory tariffs. But by far the most worrying news comes from China. The Communist Party has officially announced that it will impose an additional 34% tariff on all imports coming from the US. Now remember, back on April 2nd, what the Trump administration ironically called Liberation Day, the US had already imposed a 34% additional tariff on Chinese imports, on top of an existing 20%. That means Chinese imports are now facing a total tariff burden of 54%. And China hasn't stopped there. Because US exports to China are relatively limited, if China really wants to hurt the US economy, it has other tools. It started restricting exports of rare earth elements to the US. And this is big. These minerals are critical for manufacturing almost anything. Smartphones, electric vehicle batteries, you name it. And it's no small fact that China controls about 90% of the world's rare earth production. The US essentially depends on China for access to these materials. So, instead of de-escalating or just staying out of Trump's bluster, China has decided to match his moves, tariff for tariff. That's not good news for the short term. Because now the ball is in Trump's court again, and let's be honest, he's not going to back down. In fact, he's already hinted at more tariff hikes on his social media platform, Social Truths, saying that China made a mistake, that they panicked, and that they're doing exactly what they shouldn't be doing. Translation: more tariffs are coming. And here's where we have to be careful with a dangerous misconception, that if it's just the US and China in a trade war, then only they'll suffer the consequences. That's a huge oversimplification. Trade and finance are so interconnected globally that when two major economies like the US and China suffer, everybody feels the ripple effects. The most basic way to understand it is this. If the US and China both become poorer due to this escalating trade war, their demand for goods and services will drop. That means they won't just buy less from each other. They'll also buy less from Europe, Latin America, Africa, from everyone. And even worse, global supply chains are deeply intertwined. If China stops exporting certain goods to the US, or the US stops exporting to China, a lot of third-party companies could go bankrupt. Say, a European company that was providing components used in those now disrupted products. These businesses were part of the value chain, and they get hit too. That's why this escalation is having such a dramatic impact on economies and financial markets that technically aren't even in the conflict. Take European stock markets, for example. Today, they dropped between 4% and 7%. And no, it's not just because Trump announced a 20% tariff on the EU. That was already known yesterday. The real panic came after China's retaliation, because that raises the likelihood of the trade war spiraling even further out of control, which increases the chances that Europe will get dragged into the fallout. Or look at oil prices. Trump's tariffs don't apply to oil. U.S. consumers can still import oil tariff-free, but oil prices are crashing anyway, down nearly 15% in just 2 days. Why? Because oil is like a global economic thermometer. If the trade war gets worse and the recession risk grows, global demand for oil drops. And when demand drops, prices fall. So in short, while there was still a small flicker of hope yesterday that this trade war might cool down, that through one-on-one negotiations with each affected country, the Trump administration might slowly roll back the Liberation Day tariff hikes, today that hope is almost gone. The reactions from Canada, China, and likely soon from the European Union are all pointing in one direction: escalation. And that small flame of optimism? It's quickly burning out.